Welcome back to another video. Soil here, and today I want to talk about a trading strategy which is based on Bollinger Band squeeze. If you're familiar with Bollinger Band indicator, you know that the Bollinger Band squeeze happens when there is a low level of volatility in the market, and in this situation, the upper and lower bands of this indicator squeezes and the Bollinger Bands actually become narrow. According to John Bollinger, who created Bollinger Bands, when we have periods of low volatility in the market, then after that we will have periods of significant high volatility. And indeed, this is true. This is the natural characteristic of all financial markets. So narrowing or squeezing of the Bollinger Bands, which is indication of volatility contraction in the market, can foreshadow a significant advance or decline. The squeeze alone doesn't give us any clue which direction the price is going to break out, and a subsequent band break actually gives us the signal that a new price movement is starting. If after the squeeze the price breaks above the upper band, it shows that the price is possibly going to advance, and when the price breaks below the lower band, it indicates that the price is possibly going to decline. If you're interested to know more about Bollinger Bands, I have a video about it and I recommend you to watch it later because it's one of the best volatility based indicators that you can use for trading. Alright, getting back to our trading strategy, as I just explained, our first indicator is Bollinger Bands, and we use it with the default setting with a length of 20, which is actually 20 period simple moving average of closing prices, the middle line, and 2 standard deviation, which is the distance of the upper and lower bands from the moving average line. You can change these settings based on your trading preferences and the characteristics of the market or the underlying asset you want to trade. We also use Bollinger Band width, which is an indicator for measuring the distance of the Bollinger Bands. This indicator is simply the value of the upper band minus the value of the lower band. When the Bollinger Band squeezes, we have low reading of the Bollinger Band width. This is an unbound indicator, so it must be relatively low in the time period that you're examining in the chart, ideally in the low end of the period. As I mentioned earlier, the squeeze doesn't provide us any directional signals, and it just simply tells us that the volatility is contracting and we must be ready for volatility expansion. And because of this, to anticipate the breakout and prepare ourselves for that and then confirm the breakout, we use OBV, unbalanced volume, as a complementary indicator for evaluating buying or selling pressure in the consolidation period. When the squeeze happens, the market is flat and consolidating, and because of this, momentum oscillators are not so useful, and instead we use unbalanced volume, which is a volume-based indicator for evaluating buying and selling pressure. Based on this indicator, if we have signs of accumulation, there is increased probability of having upside breakout, and if we have signs of distribution, it increases the probability of having a downside breakout. If you're not familiar with unbalanced volume, I have a complete guide to OBV and I recommend you to watch it because it's one of the best volume-based indicators for tracking the smart money. Alright, we got all the tools we need and we must wait for the squeeze. We must look for assets with squeezed or narrowing Bollinger Bands and very low level of reading for the Bollinger Band width, ideally in the low end of the period as I explained. Then we take a look at the unbalanced volume to see if we have any signs of accumulation or distribution, to see if buying volume is building or the selling volume is building. As you can see on this chart here, in the consolidation period where the squeeze happens, the price has upside tendency, as you can see, but if you look at the unbalanced volume, you can clearly see that we have a divergence, a lower high, and this shows that the selling volume is building. So until now, we know that we are in a consolidation period of Bollinger Bands squeeze, which shows volatility contraction and tells us that we're going to have volatility expansion, and the unbalanced volume tells us that the selling volume is building and probably we're going to have a downside breakout. We must wait for the band breakout. The price must close below the lower band and then we sell or enter in a short position. Having an indicator like OBV for anticipating and confirming the breakout helps us to filter the false signals. John Bollinger, the creator of Bollinger Bands, in his book advises to be aware of head fake, which means that the price breaks a band but then suddenly reverses and turns back the other way. For example, on this chart you can see that we have Bollinger Band squeeze and low level of Bollinger Band width, as you can see, which shows that we have very low level of volatility and we're going to have an expansion in the volatility. Here the price breaks above the upper band, but this is a head fake, a false breakout, and you can see that the price suddenly stopped and turned back the other way. If you look at the unbalanced volume, you can see that here at this point where the price breaks the upper band, again, we don't see any accumulation and building of buying volume in compared to this part of consolidation. And you can see that it's in the same level. And this is a divergence and doesn't confirm the upside breakout. After that, you can see that we have a downside breakout and the price continued this direction. This trading strategy, which is based on Bollinger Band squeeze, is designed to find consolidation periods with very low level of volatility, which is usually followed by periods of very high volatility. Please pay attention that like any other trading strategies, this trading strategy doesn't provide 100% guaranteed signals for making profits. So you must always prepare yourself when the price goes against you and have the required measures for your risk management strategy to limit your losses for that case. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it. Please subscribe to my channel if you haven't already and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.